that are related to Alphabet. We will discuss losers this morning. WTI crude, Brent crude continuing to break down. Looks like it finally is happening. A little early, trying to go over the wall on the short side. Ed Mines, good morning. Don Kaufman, good morning as well. All right, so once again, we'll talk about momentum. We'll have the runner in 13 minutes, talk about the breakouts, breakdowns, stock that we have been discussing in our F and Graham score screener absolutely took off this morning. Big move on earnings, and we'll talk about what lurks in these broader markets. As always, you're joining us this morning for one reason. At 9:30, if you are not prepared, you are the exit liquidity for this market. And once again, the amount of information that will be coming out this week, jobs reports, job openings, all of the data around ADP, all of it is coming. And we have to be very prepared for any type of violent reaction by these markets should we find ourselves. I really would love to know what's going on in that other room. I apologize. Anyway, let's dig into this real quick. Okay, so momentum remains where we were effectively yesterday. Remember, we're taking the number of stocks that are breaking out versus the number of stocks that are breaking down. Mathematical formula. X minus Y equals -4. So what do we do when we have a -4 number? We turn our attention to a couple of different things. One, we're watching the SPXL, which is the leverage bull ETF around the S&P 500, currently chopping around that 20-day EMA. Very important line in the sand for the markets. We've seen this happen a couple of times in the last couple of months where we test that 20-day moving average only to burn higher. I continue to advise you, if you want to really be the first over the wall and really take aim at this at the S&P 500, we want to be under that 50-day EMA. On the UVXY, I've been talking about volatility. We're talking about volatility all week. Jeff Bierman's talking about volatility. Don's talking about volatility. Well, the UVXY in the short term has not pushed above that 20-day. We're 5% under, but we are still looking for some sort of jolt to this market that will wake people up and potentially lead to some stronger selling. And finally, it's the leverage in the broader system that we have to pay attention to. And right now, the FNGD is currently under its 20-day moving average. So we popped above it for a little while yesterday. We then reverted back. As I've said, this is an environment for reversion trades. So the very simple way to do this and the very simple way to be focused, we go back to what Stanley Druckenmiller talked about in 2018, forgive me, where he had said, it's very hard for trend traders to operate in an algorithmically driven environment. And what he was talking about is this blue line that you're looking at is a volume weighted average price. It is an institutional anchor of price. It's where they sell. It's where they buy. It's where they're constantly paying attention to where they are in terms of deviations from this line. The first standard deviation of this blue line is this darker green. The second deviation is this kind of mustard green. And then you have the third standard deviation. What Druckenmiller was pointing out back in 2018 is that a lot of the algos in this environment are propelled around these more extreme areas of the band. So you start to see selling and you push down into that third or even fourth standard deviation. And what happens? You get punched in the face by a robot. So yesterday we saw selling transpire into the 12 o'clock hour only to revert right back up and move higher and finish higher than where we opened on the day. Constantly pay very close attention in this environment. If we start to see more 1 to 1.5 to even 2% days, this is an optimal way to trade because, again, you're looking for these reversals as they come. It's a good opportunity to scalp. And we've had a lot of people, really claiming very strong success using this strategy. So during the day, names like the SPY, names like the Qs, the Russell, and then the more liquid stocks, the Teslas, the NVIDIAs, the Apples, all of them were looking for potential reversions because the algorithms don't care about fundamentals. The algorithms don't care about the news. The algorithms care about price and distance from that standard deviation line. All right, so you have an S&P 500 that is still in positive territory. The FNGD is still holding below that 50-day moving average. That gives us a little bit of caution heading into today because of the -4 figure. But for right now, just really emphasizing and focusing on rotation. If we move to groups and pay very close attention to where the groups are, The consumer communication services are typically stocks that break down in more negative environments. Technology, cyclicals, and communications all really run together. Well, today you have communication stocks moving higher because Alphabet. So Google is up 6.7% this morning because the company will get to maintain its legal monopoly on search. They have effectively ruled that they can keep Chrome, distribution and payments are preserved, and all of the companies that are in the Mag 7 and all the companies that are in the XLK, the tech benchmarks, are moving higher. This is bullish for the short term because, again, it provides support and a headline at a time that there were deeper concerns about potential rising volatility, concerns about questions about what was going to continue to happen as we move deeper into this week toward the jobs report. But for right now, Google up 6%. I would be a little cautious about this, trying to chase this. Again, this can be a headline sell the news event once the market opens. We're up 14 points on the day. But this is, as you can see, a new all-time high for Alphabet. And Alphabet continues to be a very heavily leveraged stock that is also tending to follow the liquidity cycles that we talk about on a regular basis during my hour at TheoTrade. All right, on top of that, you also have the announcement that the U.S. has made restrictions on TSMC, Samsung, and SK Hynix. They revoked validated end user status for TNC's Nanjing Ops. Don't try to pronounce a lot of these things. You'll get a headache and you'll hit your head on the desk. TMC stock is up 1% despite the geopolitical chip risk. But this is one thing to pay very close attention to. Again, you have this SOXL, which we've been discussing. SOXL has been under its key moving averages, now hovering around that 50-day moving average. This is coming outside the Bollinger Band lines. This is typically a point of contrarian bidding. So if you are going to bid on SOXL or any of the semis, pay very close attention to the MACD. You're looking for a positive momentum move into the histogram, and you're looking for these numbers on the RSI and the MFI to improve to help give you some conviction. But a nice little hover here at that 200-day moving average. We will see who else is impacted by this. But your key names around the semi-trade today are NVIDIA, AMD, SMH, TSM. And I like Broadcom as well, AVGO, which has seen some weakness in recent days, coming off that 200-day moving average. Same thing. I don't need to chase this higher. I simply need to trade it under its 50-day moving average. And today at 3 o'clock, I'm going to talk about how to trade spreads on names like this and having the willingness and the conviction to buy a stock like this out about 4 to 5 months. It may be a little bit rocky heading into December, but once again, all signs point to higher AI demand, more liquidity, more leverage. And until we see something that would suggest otherwise, momentum remains in this sector for a foreseeable future. Bond yields are spiking. Okay, so nobody really seems to care that the 30-year bond has hit 5%. It is the highest level since July, and it is obviously linked to debt ceiling fears and ongoing pressure on the Federal Reserve. What really matters at this point, and I stress this, this is a headline that I don't think a lot of people understand, that there is a broader macroeconomic issue that people should talk about. Search is dead. Long live ChatGPT. Okay. Well, we'll see. I think it's a fad, Don. Isn't it? Isn't ChatGPT a fad like the fax machine? That's what Krugman said. He said the internet was a fad. Make sure I don't get libel on this one. 30-year yield hit 5%. Really, at the end of the day, the U.S. long-term debt premium remains a challenge, and we remain very, very guarded about the idea of owning 30-year debt. And a lot of institutions feel the same way. It's almost anything over 10 years, but really anything over 7 years. What really matters, unfortunately, is what is the 2-year bond doing? And I point this out when it comes to the equity markets, there has been a fundamental shift in how markets operate going back about 8 years, 2017. So not a political argument here, just a factual one. When we passed the Tax Cuts and Jobs Act in 2017, it exploded U.S. debt issuance. So in order to pay for it, instead of issuing more 10-year notes or 20-year notes or 30-year notes when interest rates were low, Steve Mnuchin started to shift the burden onto the front end of the curve. And what did this mean? 11% of our issuance was in T-bills and short duration bills. That has exploded to 22% today. So Mnuchin and then Yellen and now Bessent are doing this. And Bank of America has suggested that we are going to move to probably 25% issuance in short-term bills. Why does that matter? It matters because in the repo markets, short duration, short-term bills are, and I'm going to use the line, liquid cocaine for leverage in the financial system, because they are high quality collateral that everybody wants. And what can happen is you take $100 million, you put 40 million of it into short-term bills. You borrow, you take those 40 million in bills, you go back to the repo market, you don't take any haircut, you just get more cash, you go back and you might buy more T-bills. You go back to the repo market. And you do this 6 times. Now all of a sudden you have a $240 million position, more than that, maybe $300 million position in T-bills leveraged up. Then you take the rest of it and you buy FANG stocks. Again, high quality collateral. So FANG stocks, you go to the repo market. You use that as leverage. You use that as collateral. Borrow more money, go back, borrow more money, buy more stocks with collateral. Now all of a sudden you've taken $100 million and you've created a $2.5 billion leveraged position. Now your net leverage probably around 2 to 3x, but overall gross is 25 to 1. And the problem is if the market blows up like it did in April, all correlations break and everything goes down at the same time. That's how the market works. So we're not worried about the 30-year because the 30-year is not actually impacting equities in any capacity. What really matters is this, and whether or not this short-term duration collateral quality remains strong. If we see a spike in the short duration anywhere from 2 to 5 to 7, that's where you start to freak out and panic a little bit because the collateral multiplier breaks, and that's ultimately what will lead to forced selling. Isn't finance fun? I feel like I'm one of the 5 people talk about this, but unfortunately, that's kind of the dirty secret about it. Nobody talks about this stuff. And again, it proves that it's all a game. And we just wait for these unwinding periods. And it's why that 50 and 20-day moving average is so important in this environment. All right. So higher yields, cap multiples, safe haven flow tilts to gold. Gold hitting a new all-time high. GLD, GDX, SPY. And I do want to point something out. Stop making this trade. We've been doing this trade for about 6 months. We've done it one last time. This is the last time I'm going to do it. Selling spreads down at the 50. It's the last time I'm going to do it. So we've done this over. I've done this over and over and over again where I'm selling spreads down under the 50-day. I think we're getting to the point where gold is now hitting a little bit of nosebleed levels. And I have no problem riding it higher, but I don't want to be exposed to a sell-off. I don't want to be exposed to profit taking. And right now, as you can see, we are overbought on gold, particularly the miners. So that can lead to a little bit of weakness, maybe a retrace back to the 50-day moving average. I'm not going to try to sell anything to the downside until we at least touch this level, but I would love it if we got back down here to the 200. Okay, so I have been selling put spreads. I've been advocating this trade for a while. I feel as though gold is now getting stretched. I'm looking for a little bit of a sell-off, and then hopefully we hit somewhere around that 3250 level, and then I'm back in, and I'm looking to ride back up to around 4,000. All right, retail and tech movers. I know it's 9 o'clock. That's when you get the runners, but let me talk this through real quick, because if you really want to be successful, I go back to this screener over and over again, and we're going to talk about this till we're blue in the face. Cheap and strong stocks, cheap and high quality stocks, high F score. I know that fundamentals usually are broken. I know that Don probably finds this boring. Don's like, Garrett, your academic nonsense, BS, blah, 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 blah. Okay, I don't disagree with you. This is boring. That's the point. Boring is fun if you actually understand it and you analyze it and you look for opportunities as they emerge.
Is it exciting like volatility? No, absolutely not. This is paint dry level type of stuff. But you know what? There's money in it. So we talk about market capitalization, and we look at companies that are $500 million. You look at companies with a high F score, high Piotrowski F score, Stanford University professor. You look for a low Graham score, meaning the intrinsic value is higher than the value of the stock. And what was on this list? What was the stock that I pulled up and I said, hey, everybody, pay attention to this? Macy's, because it's a real estate company. It's not, this is a stupid company, but it's a real estate company. And it has been trading at a low intrinsic value for months. And here we sit, waking up today, only to see this company absolutely explode to the upside, to the fact that it's probably not even, there it is. I didn't even expect it to be back on this list today. But all of a sudden, Macy's. So what else is cheap? What are real things? What are real assets that you can trade around? TriPoint, Taylor Morrison, Susanna Cellulose. No idea. Weibo, my favorite momentum stock, quality momentum, Chinese stock, fun to trade. NOG's on that list. Matson's on that list. Kohl's is on that list. And let's find Macy's real quick. There it is. Okay, 13.4, 7.5, trading at 0.6 gram. Nobody wants to touch this stock. It broke its 20-day moving average 2 days ago, and now here we are, 15% move higher. See, he's got my F score right there. I'm going to pretend I don't know what that means. All right. Meta moving higher as well because they're hiring AI, Apple's AI talent. I also heard a little rumor, and somebody put this in to our trader chat, about how there are a bunch of really talented AI people who are not taking jobs at any of these big companies because they have access to AI platforms that nobody else does, and they're using it to trade. That is going to be one of the biggest advantages moving forward in the trading world. It's the people. It used to be information. Now it's going to be AI. It is time for the runner, and no shocker here. What's breaking higher? FCX. This is a Blake special, right? Blake loves to make money around FCX. He's been on top of it multiple times earlier this year, and we're seeing FCX moving higher, breaking higher. The one concern that I have when I see a chart like this is the fact that the MFI is moving lower. So this is moving higher on less volume, but it's playing the broader macroeconomic environment where, one, copper prices moving largely because China continues to engage in easing, well, really support, but enough to help their economy. If you hear that the Federal Reserve is engaging in quantitative easing, buy bank stocks. If you hear that the People's Bank of China is engaging in easing, buy copper. One country is a manufacturing economy, China, and one is a financialized economy, the United States. That's a very easy trade to do. So FCX, how do you trade it? What do you do? I'm going to keep this really simple. All roads point to higher gold prices. So don't chase a strong stock right now. Instead, look for ways to make money on it simply by taking what the market is giving you. So if you look at FCX, it's currently trading at $45. If we look at where that 50-day moving average is, it's at $42.50. That $41 at that 200-day moving average around expanding liquidity, that's what I'm interested in. So if I go out to November, I can buy the 38 and I can sell the 40. So I am selling the $38 put. Forgive me, buying the $38 put for November 21st, 2025. And I am writing, I am selling, I am giving someone the right but not the obligation to sell me FCX stock at $40. And what it creates is a spread. Now I'm going to make $41 right now. They're going to give me a credit. My break even will be $39.59, and my probability of profit will be 78%. And I go back to this on things I want to own for the long term, on things that I am interested in because momentum is strong. I want to look for something that has an 80% probability of profit, at least a 20% return or in that range, and then an annualized return, because again, you're taking the short duration expectations of the return and then annualizing it over 12 months of 118%. This creates what we call the 80-20-100 trade. 80% of probability of profit, 20% return, 100% annualized. And the goal is, if this remains a strong trade, we can do it a couple of times and double our money over the year while maintaining high probability of profit. And if you just do the very simple math behind the way that these trades work, very simple thing. One, if you bought 3 calls on the FCX right now, right, over a period of 3 trades, what are the odds that all 3 of them finish in the money? Well, each of them will have probability of profit somewhere around 33 to 38%. Your probability that all 3 of them end up in the money are around 3 to 5%. But if you do the spread strategy, the odds that all 3 of them at around 80%, all 3 finish in the money, 52%. So you have to use time. You have to be patient, but you can utilize what the market is giving you. And I like this trade for FCX because I do want to remain long copper and I do want to remain long materials. All right, on top of that, as we look at the runner, you've got NLY and SOUN. I do want to bring up SOUN very quickly on SoundHound. The key thing you have to watch right here is this move on the MACD. So you see the histogram down here. It has been negative. If we can get some strength in this histogram, SoundHound will likely see a little bit of a rebound. I like the fact that this is a stock that is heavily shorted. We are above that 20-day moving average, and it's not something that you have to trade options around. Buy the stock, set a stop right back here at the 20-day moving average, and hopefully momentum returns back to the stock or there is a short squeeze. And SoundHound right now, 1364, pushing above those key moving averages. Good things happen above that 20-day for this stock. If the stock falls back down to that 20-day moving average, just cut it and wait for another opportunity as it emerges. As you can see, this is a stock that went from 5 to 25 post-election. We've seen some recent moves from around 11 up to around $16. You don't need to use options. And the nice thing about this is if you just trade the stock, you're not beholden to the market from 9:30 just to 4 o'clock. If there is liquidity, pre-market, post-market, you will be able to sell the stock in case there's any sudden news that you did not anticipate. All right, on the weak side, healthcare has been under a lot of pressure, and BDX is now in a short territory at the moment. Everything here is going the wrong way. Negative on the RSI, negative on the MFI, negative on the MACD, negative on the ADX, breaking under that 50-day moving average. Same thing, same strategy. Buy it at the money, sell out of the money down to around that 180 level. You're looking to stay within the Bollinger Bands at this moment, but a nice little clean trade if you can do it to the downside. Just staying very, very cognizant of the fact that weakness is now returning to the healthcare sector. Money's going to probably start to rotate a little bit. But what you're doing here, when you're doing a put spread, the nice thing about a trade like this, particularly if you go out to, say, the 19th, which is third Friday, right now the stock is at 185.20. So let's put that in. If you buy at the 185 level, and spreads are a little blown out, so I would obviously recommend that you set limits before you enter positions. But let's just take a look at what this looks like. 185 level, 180 level, right, within those bands, cost you $137. Your upside is 363. Your probability of profit is 42%, and your break even is 183.63. I want to point something out, though. The stock is currently at 185.20. So what does it mean, right? What does it mean if the stock moves? What is going on here? This is off. I don't know why it's doing this, but what you're going to want to do here is make sure that you set your stop back at that 50-day moving average. So when you set this up, if you're looking at this when the market opens, I recommend that you reanalyze and reassess everything before the market opens. If you move up to 187, that loss should be somewhere in the 9 to 10% level. And that's why it's doing what it's doing, because it hasn't quite factored in the price of where we sit right now. Let's just update this real quick and then we'll recalculate it. Okay. So as you can see, 187 currently saying that you would make a gain. That's incorrect, just simply because if the market does turn around, you would not be making anything. Set a tight stop. This should be somewhere between the 9 and 10% level. And you're looking for continued weakness on BDX as we enter today's trading session, breaking under that 50-day. This could be a long day for BDX traders. GNRC, interesting to see this one. I guess no hurricanes are hitting, but we are moving under that 20-day moving average. I'm looking for a little bit of a bounce actually here up to 185 before we roll back over. As you can tell, my seasonal allergies are back, and it is a good time. Microchip, MCHP. This has been weakness in the semiconductor sector. I like these types of moves down, but once again, I'm going to say if you're going to try to trade some of these names to the downside, your limit has to be back at that 200-day moving average. Stuff that is moving, stuff that is in focus, Mara. All of these mining companies have really done well in recent days. Mara hasn't moved. And when Mara doesn't move, you have these sideways moves that are transpiring. It feels like something is up. So from a speculative perspective, and if we are going to continue to see ongoing, this is kind of like a Gianni special, right? These stocks don't do anything for a while, and then they either break out or they break down. I want to be paying very close attention to the 1634 level for Mara. If we hit 1634, that's where I'm buying. And I'm looking for some sort of breakout pattern to the upside. You're seeing a lot of narrowness here in these Bollinger Bands. All three of these indicators are now aligning. So this has not broken out. All of the other ones have, and I think that there's a lot of opportunity here to the upside. It's just a question of playing the right technical at the right time. 1634 is where I would be entering. That's 15 cents away. And then looking for a ride up, possible retest of that $20 level. You don't need to trade options. You simply need to trade the stock. And then the final one, another horse to watch, one of my favorites in the world. This is Plains All-American, but this is the limited partnership. So Plains All-American is second and second horse, maybe third horse to Energy Transfer and Enterprise Product Partners. PAGP owns Plains All-American Pipeline. They are the partnership that is not exposed to a K1. And as you could see, a lot of consolidation and movement along that 220 and 50-day moving average. I am a big fan of this stock. I am a big fan of this company. And if you're looking for a backdoor way to trade the AI explosion, it's in natural gas. And it's clear in the pipelines. So as we continue to see, there is RSI sitting right near 50 at the moment. We're looking at the MFI from basically a news catalyst, a little bit of things kind of moving around. But, again, this is just about understanding and recognizing value as it emerges. This is one of those stocks that you can own into perpetuity, and it's going to kick off 8% a year. You take that capital, and that becomes your trading cash. And I highly recommend that people think about it that way. You focus on infrastructure, closed-end funds. You focus on Plains All-American Pipeline. You look at some of the midstream players. You own some of the data REITs. You own the companies that are in the alternative investment world. You take the cash that they kick off either monthly or quarterly, and then you use that money to trade. And then that way, you're not only owning very good, strong assets that are also protecting your wealth, also inflation-proof. You're also getting very strong cash flow that you can utilize to try to gain and increase your overall wealth. So you take a 7% that is kicked off by a company like Plains and you trade it smartly, that dividend can turn out to be a 50% dividend by the way that you're trading it using that logic than just the 7% that you're dividend reinvesting with that company. So keep that in mind. PAGP, ADX flip is possible here. You're looking at this kind of chop at the moment, but this only breaks down in very extreme momentum environments. And it is a buy every single time that the market panics and we start to see that pattern of insider buying. I am a big, big fan, once again, of this name. All right, Slick Cobra. Okay. I'm not getting involved. So why PAGB over PAA? There really is no differentiation, but I think it comes down to your choice, right? And there's Eric, chiming in. A lot of people are intimidated by K1s. So let me give you a little quick story and understanding of this. A K1 is a government form that you receive if you are part of a partnership. The Plains All American is a MLP, so it has a different tax structure than a traditional corporation would. I have an S corporation. All of the net income that I have at the end of the year ends up on a K1, and I have to pay myself. Now, it's nice about it is you bypass corporate taxes, right? So you get that cash flow. You don't have to pay Uncle Sam on Medicare and Social Security, on both sides. But it's a filing. It's another piece of paper that you have to track down. And a K1 becomes a huge headache for some people at tax time. They lose them, they mail them, they put them somewhere, they forget a password, they don't know how to sign into a company's website in order to get the K1. Here's the real pain in the ass, right? I just bought a house. And while I was filing for my loan, I got an email from the lender, and they said, we need your K1 from 2022 on Energy Transfer and Enterprise Product Partners. And I said, I owned about 300 shares. And they said, we have to prove that you didn't own more than 10% of the company. And I'm sitting here saying, if I were buying a house this size at this price, I assure you, I don't own 10% of Energy Transfer. And they said, we need the filing. So I had to spend pretty much all of last Thursday tracking down a filing to show that I was owning 0.0000002% of a partnership of a stock that I bought and held for maybe 6 months at the time. It's a headache. It's a huge pain. So, if you're on top of it, it's fine. But again, it is one of those things where if you are taking part in the US economy and you're an entrepreneur and you're self-employed, you will pay the price of it. I had to write a letter explaining a $37 Venmo that I did in 2019 the other day. Literally 200 words explaining why this Venmo went there, how much money it was, who it went to, who the person was, why I did it. This is why I don't like the banking system. All right, so K1s are a pain because they issue them late. That's another good reason as well. Most you investors are aware of the horrific taxes on MLPs. Real money, not just K1 paperwork. And again, PAGP is not a K1. It is the same benefits as PAA without the headache. This is a corporate structure. So it's 9:19, and I am going to be back later today at 3 o'clock. We're going to talk about trade and spreads. We're going to look for some opportunities as they emerge. I highly encourage you to listen to the Oracle. Well, he's calling himself that. This is Risk Impact Week. Jeffrey Bierman's going to be hosting it. He is rolling hard on it, right? Day 2 right now, the focus is systemic risk and systematic versus non-systematic risk. I know those sound like really big words, but I promise you he will break them down. And in this environment, particularly in September, this is the time to really be paying attention to what Professor Bierman's talking about, because again, when you start focusing on fundamental risk, technical risk, statistical risks, and understanding the differences between them, you're going to be able to manage your own risk as well. And that's one of the core things that goes. Most trading educational sites and platforms don't focus on risk management. They're focusing on, we could turn the next trade into 100%, 200%, 400%, but they don't teach you that how to focus on timing, how to focus on risk, and understanding where are the bullets coming from. You have to understand where all these things are. So pay attention to what Professor Bierman is saying today. I will be back at 3 o'clock, and we have Don coming up with some music. You better play some CCR for the first time, please. And I will catch up with everybody else relatively soon. 9:20 heading in. If I don't see everybody else tomorrow, Market Masters, 8:45. Have a great day, everybody. Pay attention to Professor Bierman and Don, who's going to be hitting the shuffleboard right now. Cheers.